Let's touch base with the management of IDBI Bank. Mr. P. Sitaram, who's the CFO of the bank, joins us on the phone line from Mumbai. Mr. Sitaram, thanks very much for speaking with us. First up, really, IDBI Bank is looking to create another infrastructure debt fund with about 1,000 crores. When would the entire funds for this product be raised?
The process is on. We would expect to make the announcement in a short while after we have completed the necessary process to obtain the necessary approvals.
Okay, so could you please confirm for us the quantum of the funds that would be committed by IDBI and from other sponsors, and what would be the shareholding of the other sponsors?
It is too early to talk about that now. We'll be able to talk about it a little later once we have the necessary approvals.
When you say little later, are we looking at this quarter itself?
Yeah.
Would you be able to confirm for us, Mr. Sitaram, good morning, this is Neeraj Shah here. Would you be able to confirm for us about your plans, if at all, to raise around $1 billion through sale of FCCBs in FY13?
See, that is not FCCB, you mean the MTN.
Sorry, convertible bonds is what I mean.
No, the IDBI Bank does not have any plans to issue convertible bonds.
What about the foreign currency denominated bonds? I believe that's what you plan to raise, right? I mean, maybe $1 billion through that.
That is an ongoing MTN program.
Okay.
Where we had initially filed for $1.5 billion. And so we are considering enhancing that limit by another $1 billion. Okay. But the actual withdrawal will depend upon various factors of the market conditions, the interest rates, demand for the funds, and so many.
Speaking of rates, sir, what's your belief of how would this policy shape up like? You think 25 basis points is a given, or could there be a surprise to that end as well?
Yeah, actually, it's quite a difficult situation. There is considerable pressure on the RBI to cut the interest rate to show some support for the growth initiative. But I don't know whether 25 basis points will really give that message. I would say that the RBI has a choice between waiting a little while with an eye on the inflation and the exchange rate, or if it has to do, perhaps it would have to do a 50 basis point cut, and so that the message for the growth is delivered, and maybe it can pause for a while after that and see how it works out.
Is there a possibility where they go in for a 25 bips rate cut and then also some CRR cut to address the liquidity issue?
To my mind, the CRR cut at this stage is not really going to happen because the liquidity is not so much of a concern as much as the interest rate. So what RBI will be focusing in on is more on the cut in the interest rate, and I don't expect any cut in the CRR.
When you're talking about a 25 bips cut, and if you go by that expectation, do you get I mean, how much do you think that would impact the net interest margins for banks such as yourself?
Not really. The banks are supposed to the price the lending as per the new base rate formula as linked to their interest rates. So it's the cut in the interest rate is not really, at least theoretically, going to affect their NIM. It's the ability of the banks to pass on this cut appropriately on the lending side so as to preserve their NIM, which will be the true test. So on a declining interest rate scenario, if we start cutting interest rate, I don't think banks will be very much affected on the NIMs. More important is to see how much the credit growth will be impacted by the cut in the interest rate.
How much do you think a 25 bips cut would change the targets for credit growth?
It's a combination of factors, not just the interest rate. It depends upon the outlook for the investments, the policy environment. So if RBI does cut the interest rate, I would people would wait for the government policy response also to take up the bigger investment decisions. I think it would be a combination of all these factors which will affect the credit growth.
Okay, just before we thank you, I'm just reiterating a point that you made. If I understood you correctly, you believe that given that there are no other considerations, ideally either the RBI would wait and would not cut interest rates and give inflation its due? Or if at all, maybe the RBI would go ahead and cut it by 50 basis points and then see the impact thereof?
Yeah, I think so.